One of the top performing stocks in fashion and apparel right now is On Holdings. The company reported earnings earlier this week, and there's really not anything to complain about. This isn't the case with a lot of consumer goods companies right now. Retailers are starting to slow down. Customers are starting to trade down to a little bit lower cost goods. That has not hurt On Holdings in any way. The company reported phenomenal growth for the fourth quarter of 2024. Also said that margins were exceeding their expectations in excess of 60%. Now, there's a lot of wonky things going on because this is a Swiss company, so when they report in Swiss francs, but most of their sales are made in the US, so that means they have to convert that money to Swiss francs. I'll go through both the US dollar and Swiss franc numbers to just show the difference there. But really, a lot to like about this company, so I want to show why this is one of my favorite growth stocks. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's dig right into the report. And this gets a little wordy, but I'm going to show you exactly which things you need to key in on as an investor. Strong results for the full year of 2024. Net sales increased 29.4%. A couple of years ago, management gave long-term guidance, said that over the next 3 years, they wanted to grow almost 30% per year. They have exceeded that. Now, on a constant currency basis, that's basically taking out the fluctuation in currencies, that value or that revenue increased by 33.2%. So let's just show those numbers here to just kind of get this out of the way. The first chart I'm going to show is their growth in Swiss francs. This is kind of a more consistent number typically, but you can see here compound annual growth rate of 45%. All these are trailing 12-month numbers. The other thing I wanted to show is the profitability of the business. You can see here that On is profitable. It is extremely tough to be profitable when you're growing in the 30% range. As a company that needs to make hard goods, you need to increase your marketing spend and operating spend. Typically, those things mean that you lose money as you're growing the business. On has been able to be profitable and grow the business. So as their revenue growth slows, and that's something that's naturally going to happen, you're not going to grow 30% forever. So as that growth slows, you're actually going to see that profitability improve long term. So something to keep an eye on. There should be more leverage for them to put on the bottom line. But then let's compare that to the US dollar numbers. And this just makes things a little bit lumpier because, again, everything is now converted into US dollars, still profitable. That growth rate is still about the same, but fluctuates over time. And one of the things that they do have to take an impact on is if there's US dollars and the Swiss franc gets weaker, they have to take basically a profit on that. So that does end up hitting the bottom line depending on whether the Swiss franc is getting weaker or stronger compared to the US dollar. So a little bit wonky looking at their results, but let's get back to the numbers. In the fourth quarter, net sales increased by 35.7% year over year on a reported basis and 40.6% on a constant currency basis. Those are just astounding numbers for a brand that's trying to upend really established brands like Nike, like Reebok, like Adidas, Under Armour. All these companies have bigger marketing budgets than On, and they've been able to grow just phenomenally well. A lot of the strength was in the DTC business, the direct-to-consumer business. So that means that consumers are going directly to On Holdings. Maybe that's coming through an advertisement, but maybe it's coming from their email marketing campaign. So that seems to be working well, and their gross profit margin, 62.1%. This is a section where they break down all their numbers. The top is the full year, if you want to look at some of those, but I'm going to focus on the 3-month period. And again, the numbers get a little bit detailed in here, but direct-to-consumer sales increased 43.4% and 48.2% on a constant currency basis. Those are just crazy good numbers, and this is really strength across the board. EMEA, Europe, Middle East, and Africa grew by 31%. The Americas grew 28%. That's their biggest market, but that grew 28.1%. And then there was a lot of strength in Asia Pacific, phenomenal growth at 117.5%. Constant currency basis is on this next line here. You can see the numbers are just a little bit better. That is, like I said, because of that weaker Swiss franc. Shoes, apparel, and accessories. This is one of the things we want to look at with On. Typically been a shoe company, but over time they're going to be able to grow, particularly in their apparel business. I'm not necessarily super worried about their accessories business, but you do want to see more sales of sweatshirts and shoes and all the things that go along with being a sporting goods brand. We're starting to see some success there. Shoes were up 33% on a reported basis. Apparel up 77.5%. So this is, again, a very small business. Swiss francs just 32.6 million compared to 569 million for the shoe business. But the opportunity to grow in apparel is really going to be astounding. The accessories business, very, very small at 5.2 million Swiss francs. And if we just go to the constant currency numbers, the growth rates consistently a little bit higher, but 82.5% for apparel. So that's an area where maybe not quite as appreciated, because most people, when they see the shoes, but the apparel business is going to be one of their growth drivers long term. Profit margin, again, gross profit margin 62.1%, just phenomenal results for a business that is growing this quickly. That leads you to the net income margin of 14.8%, an improvement from a negative margin a year ago. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. The other thing, balance sheet looks really good. Increase in cash of almost 100% to 924.3 million Swiss francs. Their guidance, no surprise, they're being a little bit conservative with that guidance number given the momentum that they had in 2024. When you give a growth rate, you do have to grow on top of what you grew last year. So that compounding makes it harder to grow even more. So they're saying that they're going to grow at least 27% for the full year of fiscal 2025. That is the calendar 2025 as well. And that would translate to Swiss francs $2.94 billion worth of revenue. They do have some pretty highly anticipated product launches coming later this year, including their spray-on shoe. That's one of the things that really innovative, really going to be interesting to see if they're going to be able to turn that into a fairly sizable business. But we'll see on that one. That, again, could really change the economics of the business because it moves the production actually closer to the customer. That'll be a pretty slow burn to build that out. But again, the kind of innovation that I like to see, they're also expecting gross margins to be really strong, 60.5%. So this is going to be industry-leading operations for On Holding. This is why I love the operations of the stock. So looking at the earnings report, I love everything that I see. Again, this is one of my bigger holdings as an investor, and I was buying this as much as 2 years ago because you saw the brand improving. I started to see it as kind of a suburban soccer parent. You start to see just parents wearing them around, and they're the kind of people that are going to be able to spend $150, $200 on a pair of shoes. That's actually where the money is made in the shoe business. So we're seeing a lot of growth there. Apparel going to be a huge opportunity. Really, really high-end apparel, very expensive, but also looks really high quality. Haven't had a chance to get any of their apparel yet, but I'll make a point of doing that in 2025 because this is one of those brands I think is going to continue to have a ton of momentum. So love what I see from On. Happy to have it in my portfolio. It's getting a little more expensive, so maybe not one I'm adding right now, but gonna just let this one compound over time. Let me know what you think about On Holding today. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.